What actually happens to your money if a stock you own gets delisted on the NGX? I've gotten this question a couple times, so I'm going to answer that today. Delisting is when a company's shares are officially removed from the list of companies on an exchange. Once a stock is delisted, it can no longer be bought or sold on your normal brokerage app. But this is the part that confuses people. Now, the company didn't take their shares back from you. Your shares did not disappear. You still legally own those shares. The only difference here is that you lose the ability to trade them on a normal exchange, like on a normal brokerage app. And also, it depends on why the company was delisted. Now, there are two types of delisting. The first one is voluntary delisting. This is when a company chooses on its own to leave the exchange, basically to leave the public market on its own. When this happens, shareholders will receive advance notice that this is what's going on, and they'll be offered an opportunity to be bought out, like to be able to sell their shares at a particular set price. So they can be offered to be bought out, so you can just go sell your shares and get paid. For example, when MRS Oil voluntarily left the public market in July 2025, I think, after 55 years on the NGX, the company set aside funds to buy out investors who wanted to exit, the ones who decided not to sell their shares during the buyout. Basically, they had their shares moved to NASD OTC Securities Exchange, where they could still be traded just on a different platform. And the second one is compulsory or regulatory delisting. And this is where things get painful. Compulsory delisting happens when the NGX basically forces a company out of the stock market, out of the exchange, basically. And it's because probably they failed to meet its obligations. Things like not filing their financial statement for years, persistent governance or corporate failures, or just complete operational collapse. Then they'll be forced out of the exchange. If you remember, in April 2026, I posted that the NGX delisted the entire and Grief Nigeria. If you were following, you would remember. For Grief Nigeria shareholders, the company had already completed its formal liquidation process, meaning that investors must wait for any residual funds from that whole process. That's if any exists at all. For the entire investors, I'm just going to be blunt here. It is a case of investment gone irredeemably bad. In 2025 alone, over 8 companies were delisted from the NGX with no assets left and no buyout offer. Those shares are essentially worthless. You own them on paper, but they are of no value to you. So how do you protect yourself from being on the wrong side of a delisting? The first most important one is to always consistently check the NGX X compliance report. The NGX regularly publishes a compliance report that shows every company on the exchange, which one is defaulting, which one is okay, which one doesn't have any problems, which one is pending review, all the stuff. You see everything on the compliance report. You even see companies with delisting in progress status. Yeah. So you can actually tell that these companies will be delisted soon if nothing changes. I'll just tell you, a company being on the watch list does not mean immediate delisting, but it's a clear warning sign. Like if you see that, then you know that there's a problem with this company, like a serious problem with this company. Because for a company to even be on a delisting watch list, then you know that it's bad. 2, never ignore a company that has stopped filing their financial statements. It means there's a problem. Several companies that were delisted in 2025 had not filed audited accounts for multiple years before regulators acted. So they would have gotten warnings, they would have gotten ultimatums. Nothing changed. So yeah, they were delisted. If a company you own has gone quiet on reporting their financial status, financial statements, audited reports, etc., that silence to me is a red flag, and you should watch your step. 3, understand what you're buying. I cannot even stress this enough. Many of the companies that were delisted were thinly traded, barely operational, and had been in regulatory trouble way before the final delisting came. Doing basic research before you buy into any stock will protect you from these situations completely. Maybe not all the time, but most of the time. Finally, if you receive a voluntary delisting email notice or whatever, with a buyout offer. Read it carefully and respond within the stated deadline. Missing deadlines in a delisting process will cost you options, because then if your shares are moved to the NASD OTC, that's your only option at that point. So read it carefully. And some of you don't read your emails, but okay. Delisting is not always a disaster, not unless you make it one, because it can be if you're not paying attention. Know what you own, watch the compliance reports, or rather, read it, and never ignore warning signs from a company you're invested in. Share this with your investment circle and drop your questions below. And as always, follow me, like, share to anyone who fancies content that revolves around the US and the Nigerian stock market. And I'll be seeing you in the next video. Bye bye.